Testing, testing. Two. All right. Okay. So first off, I'm gonna look for where the volume is in the market. Some ridiculous, bro. Oh, this is 24 cents. That's got so much volume. What in the? Why does it have my platform missing? Possible 40. Oh, that's a dot. Okay, okay. 40 million rated. I was about to say, how in the world is it that many? But yeah, let's just go through and see what is ringing the bell um far as volume today. Might get rid of some of the cheaper ones. So I pulled out my old scanner. Basically, I had one scanner that was really defined by looking for stocks that are moving a specific amount per day. Um, and that one is pretty much based on ATR. Looking for ATRs over 75 cents. Looking for stocks that can easily move 75 cents in a day, right? Um, Recently, my trading, I've been taking trades on things that just don't give me the motion that I used to see. So I'm switching back over to the normal, or I guess the usual trading style. Look for those things that are can move easily throughout the day, a specific amount, right? This morning, these things that are up here, these cheaper ones, I kind of actually YSGN, this little cheap one is up. It's up 30%, no catalyst, just sucking up volume, 67 cents. I end up, to be honest. Mm, oh no. So for the scanner that I'm using to see these all of the volume, I'm gonna go ahead and change this. I actually want to not look at the penny stocks. I arc had opened it all the way up, but really cheap. Flash into the 75 in there. Okay. All right. So what is leading now that is over 75 cents? Got MBO took a big old drop down, 40. 47 down here to 41, so extreme falling from there. BNDA up 40%. 40%, but does look like a little bit of a chop factor. Yesterday went from, it looks like it gapped up on Friday afternoon, 666 from 602, went up there to 9 and just grinded its way down. D Hub, another one I'm seeing up 22%. ACLX, that one does not look good at all. That one looks like it was some kind of acquisition, moving from 67 up here to 116, either acquisition or some kind of split. IKT up 29%. It just hit 1 million shares traded, $2.28. That D Hub we already looked at, grinding down. AIDX crash. Ops Top shipping quickly went up there from 5 all the way to 7 and gave it all back. And DA has a little bit higher float, 39% there. Really choppy. And ITK up a bits help, being up 44%. Seems like, does it have any catalysts? No catalyst that I Yahoo. Let me go check it. IKT. This is Inhibicase Therapeutics, so it is a biotech, right? The amount is of right. So this one is out of Atlanta, Georgia. Founded in 2008. Um, this one operates a clinical stage pharmaceutical company that develops therapeutics for Parkinson's disease and related disorders. Its lead product candidate, IKT, this number, a non-receptor Abelson. Oh my gosh! All right, look at the news for it. At 15 employees, it is healthcare biotech. 1 day ago, capital opens on 29% company IKT, but individual investors control 41%. That was 2 months ago. They did a public offering of 100 million 3 months. All right. Well, IKT is the thing that's playing around right now. ACLX is IKT is now at 3 million shares traded, hit a high of 265. Ooh, the daily chart's kind of choppy a little. Choppy a little. All right. So as we can see, it's really, really. I just don't know how the motion's gonna get out of this, but it is up to 250. Got this kind of what looks like some type of. This is the daily chart, so it looks like a head and shoulders, like a head right here, shoulder, shoulder. But I'm not sure. If it'll go up and test. I'm not sure. I don't see any strong catalyst behind it, but it has 5 million shares now, so it is moving. It's moving downward, but it is where the momentum is currently right now. So see how that plays out for. Currently number one, two, oh no, 1, 2, 3, 4 on the day, without all of the stocks from under the really, really penny stocks like TIRX. It's up 88%, but it's only 8 cents. XTKG only 8 cents. No, so these I just cut out. Everything under 75 cents I cut out. So I kind of started right here. MBO, this is a $40 stock. VED, VNDA, and then IKT, that next one. Right. Looking at IKT, we're starting to see those wicks form. Got a high up there, 265, low of this range. It's a little range forming here. 265 down here to 238. See how it ends up holding here. IKT, 43% up with almost 6 million shares traded. Follows this downtrend, start to walk its way through the level, the right around the 250. Hold this 250 and falling through the 238s back towards fives. Still up 40% though. Good morning, Hebrew. Good morning, everybody. Yep. So yeah, I am getting back to my I was trying to strat the whole follow the catalyst all the way out. I just don't like it. I just don't like the strat. So I'm giving up on it. I'm going back to ground zero, trading ATR based trades, looking for stocks that are actually moving quite a bit. Looking for ATRs that are at least 75 cents. So 75 cents and up, I want to be trading those. If they've been averaging 75 cents on a normal day, then on a hot day, the chances that they can go, $1, $1.50, $2 is going to be a lot more realistic. So looking for those trades. And these like IKT is a $2 stock. Basically, what I'm doing with the ATR is based on ATR probabilities. How probable is it to cover the distance of its average value on a specific day? So, like for a $2 stock, what would be the probability for it to move 75 cents, right? So this one, look down here, it came from what, $1.75 or $1.80 something close here and moved up to 265. So how big is that move? That is $1.80 up to 265. Okay. That is 81 cents, right? Now, if we look over here on the daily chart, I have my ATR down here of what the ATR has been over the last couple of days. Look at this: 20 cents, 18 cents, 15 cents. All of these lower ATRs, 13 cents. And then all of a sudden today, it makes 81-cent move. Now, what I'm looking for, or what I'm not looking for, I don't like about these is that they revert to their original ATR, right? If it's been moving 15 cents a day, 13 cents a day, especially without a catalyst, it's going to probably revert to this old ATR back to what, 10, 20 cents instead of moving 81 cents like it did this morning. So the chance that it'll repeat this 81-cent move is very, very low. So it's currently on a little downtrend. It's 29, it's up 29% right now. The only other two that I saw that were around it are just trading choppy. VNDA with ATR of 44 cents. And then ACL looks like some kind of acquisition. I don't want anything to do with that. So right now, just sitting on my hands, looking around the market, looking for those things that are going to be uh, moving consistently and have a history of moving at 75 cents per day. But until then, I want to be finding the standout stock on the day. I want to be looking for, hey, where's the volume on the day? And can I find something that meets my criteria in all of this mess? Especially if I can find it with catalyst. That's even better. All right, so IKT went back down, moved from 265 back down to 225. We saw this little bit of a trend going down here. Not sure how it's going to end up respecting that, but did drop quite a bit of ways away from that 250 level. That's where the point of control is, where the majority of trades happen during this session, and only up 27%. Yep. ACLX is a acquisition. It is definitely an acquisition. That one alone, don't want those types. AIDX looks like some kind of IPO that opened up on Friday, went up to $50 and fell all the way down to $16. Oh, that's all the information it's got. So it opened up, yeah. Friday was the night. Thursday. So it opened up Thursday at some point. Went up to a high of $50, fell all the way to 19, fell down here to 13. So the IPOs are kind of a little messy right. The other thing is, with like I said before in previous videos, the 75-cent rule, looking for things that are over 75 cent is specifically for the halts. Um, if something is under 75, it closes the previous day under 75 cents, it's gonna be a halt factory. It's not gonna be able to move much. No, they're gonna be halting and halting it. Let's see what's going on. Let's get a statement from the company. All this stuff halting. I'm looking for things that are usually things that are over 75 cents. Now, they may halt like that as well, but they cover a lot more distance while they're halting. So like, hey, I'm okay with that, with the distance covered, but you always got to be careful of a fall. You know, they halted for news, halted again for news, and then all of a sudden the news drops and you drop. That doesn't happen all the times. It is rare events where it continues to go up, up, up. Um, uh, that. So GETY is a merger agreement. Kind of weaker news in the cheaper stocks. This is a dollar stock up 35%, but in a merger agreement on a Monday morning, we see mergers, we see acquisitions. Those are the top two up right now. And IKT ended up continuing to fall through the floor. Like I said, it's a very low chance for it to repeat that 81-cent move because of the previous day's ATR. Previous days being 13 cent, 14 cent. And it makes an 81-cent move. Everybody in there is trying to sell because that was like absolutely unnatural. And now it's only up 15%, so completely out of the running for the day, pretty much. EET is the next bullish looking one. But like I said, this merger, right? It says Getty Images and Shutterstock receive unconditional antitrust clearance for U.S. Department of Justice proposed merger. So Shutterstock is an image company. They sell pictures and images. I mean, I don't even know why they're up 40% on a merger, but it is what it is. If you don't know what Shutterstock is, definitely go look it up. They'll give you some pretty pictures, you know. But they don't really, not really a money making machine like that. I've never seen Shutterstock really do well as a. Is it a low float? Let me see. By oh, absolutely not. It's definitely a higher float on GY. Down there. So yeah, this is just a nice, smooth Monday morning where you come in and kind of see what's going on. Let's flip over to the morning news, see what the headlines are looking like over here. All right, so it says a deal is a deal. EU says it won't accept a U.S. Tariff hike. Hedge funds that piled into U.S. Bitcoin are first to exit. Trump trade war, fresh escalation. Now, I believe it was last week that the tariffs fell through, or some of the tariffs, or something. And Trump was like, "Hey, I'm just gonna put in some more tariffs." He's really trying to get these tariffs going. U.S. to stop collecting tariffs struck down by SCOTUS, SCOTUS. Arcel X, Arcel X shares rocket is on Gilead's 7.8 billion buyout deal. Novo's stock sinks after new obesity drug loses to Lilly's. Smart glasses hint to how AI threatens physical goods too. Know what they're talking about. You take some AI glasses into a market, and you're doing like a best value observation, just walking through the market with AI, you may not buy anything in that store because you're seeing something across town that's like at a discount or something like that. That's probably what they're talking about. I think that's just a guess. Let's see. Experimental lung condition drug fails. Gilead to acquire cancer therapy developer Arcellx, and that's what we saw that big gap up on ACLX. Dollar erases drop as traders mull Trump's next steps on tariffs. Cybersecurity is a well positioned in the AI. It sure is. It sure is. Why this expert says banks are undervalued. AI chip maker Nvidia posts Q4 earnings this week. Um, the ways that banks asset managers can really leverage AI. Retail traders aren't just dumb money anymore. Here's why. Interesting. Let's go look at what they're talking about.
Well, retail may be shedding that dumb money moniker. New data from eToro showing a vast majority of younger traders are investing monthly, actively reviewing their portfolios and diversifying to assets beyond equities. For more, we're bringing in now Brett Kenwell, U.S. investment analyst at eToro. Brett, it is good to see you. Let's start here. Your report suggests investors have grown up, they've matured, maybe moving beyond meme stock behavior and YOLO trading. What do you see on the platform that suggests that kind of suggests this shift?
Yeah, Josh, I think when you look at retail today, when so many of these younger investors in particular got involved with markets, it was in that heyday coming out of COVID. And, we had stimulus checks and, everyone was at home and on social media. And, it didn't exactly promote the best investment practices necessarily. Like you mentioned, meme stocks and YOLO trades. Now retail has sort of lived through 5 to 6 years of fairly notable market events. We've had the, most recently in April, we had the Liberation Day sell-off. Before that, we had the 2022 bear market, and then of course COVID. And so in 5 to 6 years, that's a lot of notable different environments, a lot of periods of volatility, and they've learned from that. That's not to say that retail doesn't engage from time to time in markets where they, believe there's an opportunity. But for the most part, many of these investors engage in a much more sort of systematic type of way, monthly investments. As the graphic you had up there showed, 90% of millennials and Gen Z investing on a regular basis.
Monthly.
3/4 of investors overall reviewing their portfolios on a regular basis. So they're really kind of engaged with this bigger picture theme when it comes to the market.
That generational point is interesting. So Gen Z and millennials investing monthly at the highest rates. Why do you think that is? Why are they maybe investing differently than Gen X and boomers?
That's a good question. I mean, anecdotally, I think it's their sort of engagement with the market. Now, with the tools that are around today, whether that's using some sort of AI product or even an LLM, or if it's just having that more regular engagement on social media with friends and family, they're stepping into the market, I think, because they know the sort of longer term trends. While we have some volatility in the short term, they know longer term it does tend to be okay. And they want to participate in that. They want to go along for that ride.
What are retail investors, Brett, buying the most right now? Like which asset classes, which themes are seeing the biggest inflows? Is it U.S. stocks, international stocks, crypto, commodities? What do you see?
So in this survey, we are speaking about 1,000 retail investors in the United States, but we do this survey quarterly on a much bigger scope to go also around the world as 10,000 retail investors. What I can say from the U.S. cohort of that group is, yes, U.S. stocks, not surprisingly, is the favorite investment spot for these investors. But when we look at Q4 of 2024 through Q4 of 2025, so just for viewers, I suppose, we did this survey in late October through mid-November. And so we had that sort of nice year-over-year look. And we noticed that investments in bonds, in foreign equities and bonds, in alternative assets like real estate, in cryptocurrencies, commodities, namely gold, all increased across the board. The only real decline was actually in cash. So it shows that retail's sort of sprinkling their money around in different pockets of the market. But yes, U.S. domestic equities are still the favored spot.
Another data point that stood out to me, Brett, in this was gold. Gold ownership rose to 50%. That was up 8 percentage points from Q2 25. What would you chalk that up to, Brett? Chasing performance? Is that inflation hedge, currency risk? What do you think?
You know what? I kind of think it's a little bit of both. So we've asked about gold a little bit more specifically in 2 quarters ago and then 4 quarters ago. So we have these sort of intra-quarter or intra-year looks at what investors are doing with gold and why they're doing it. One big portion of it was, yes, for the weakening dollar. As the dollar has weakened throughout 2025, gold was actually the top preferred way for retail investors to sort of position themselves against that. But at the same time, gold has now outperformed the S&P in 5 of the last 8 years. So I think it's hard not to say that retail is also trying to play a little bit of offense when they're looking at precious metals.
Finally, Brett, we often talk about retail as dumb money, which I hate. I hate that because retail's been buying the dips. Retail's been right. Retail's been smart. Do we have any line of sight, Brett, in terms of how retail's been performing relative to institutions?
I hate that label too for retail because they're so adaptive, they're so quick, they're so nimble. That doesn't mean that they don't make mistakes. Of course, we all make mistakes as investors, but this is a group that has learned to sort of embrace the risk that comes with the opportunity of owning stocks for the long term. And I think April was the best example of that. When we look back through our data, we saw that retail stepped in such a meaningful way on April 3rd, 4th, and 7th. That's a Thursday, Friday, with the market finally bottoming on Monday, April 7th. And they kept buying that dip all the way through the month. And that set them up to outperform institutions in 2025. I don't think that they deserve the dumb money moniker, but they keep shedding that year by year. And I think as they keep making up a bigger part of daily volumes, they'll keep shedding the label.
Yeah. Yeah, that's how mine was last year. Not my short-term portfolio, but my long-term portfolio definitely outperformed the market for sure. Um, I don't know. It was just a couple of sectors that just was blessing. Healthcare. I have some real estate, but it's more inside of ETFs. It's not really I'm not super heavy into real estate, but some of the precious, like you said, precious metals and things like that, they were just blessing last year. So I would agree with that. Last year was a blessing, but I don't know what this year's. Well, this year's I'm already up, so I don't even know. We'll see if I get the same returns or better this year. I'll just continue to invest. I definitely drop money in my portfolio weekly, not monthly. Uh, yeah, I definitely look into increase that portfolio side because like what I've seen is okay. Yes, I have to pay taxes on these dividends. Yes, I have to pay taxes on all these gains. But once I pay taxes, it's like it's my money. It's not locked up in a 401k. I don't have to wait till I'm 65, 75, 85, whatever. I think it's 65. I'm just joking. But 64 and a half. But I just I like having pullable resources, but also having those resources pay into other accounts. So it's almost like having an employee that's paying into my accounts, feeding the other portfolios. And so those other portfolios that are growing, they feed something else. They feed something else. So everybody's an employee. You know what I'm saying? And I'm just taking my workload off, slowly, by investing that weekly amount and putting it into those things that are performing well. So I mean, I don't know what happened. It was just going up. It was just going up. I'm just doing that. I'm cool. I do like buying the dip, but I'd rather be in a higher performance stock. Something that is just going up. Just be going up. Because if it does pull back, that's cool. Um, I'm not entering my life savings into every trade. I'm just buying a little bit on the way up, just little pieces on the way up. But anyway, about to get out of here. It's been 30 minutes. I don't see anything I like. Um, we saw VNDA. Let me see. We saw GETY pop up, but it's a cheaper one. Popped up to $1, came back down. ATR of 9 cents, just not what I'm looking for. Looking for ATRs over 75 cents that have a history of hitting that 75-cent mark, history of hitting those high numbers. And what I'm looking for from it is a 30 cent winner, right? That's all I need. Get 100 shares, 200 shares, 300 shares. Those 30-cent winners add up. And that's how I got my account up the first time. So I'm just going to stick to that and look for the stocks that are moving like that, and especially if they have catalysts. They have catalysts. Ooh, see better, even better. But yeah, That's it for me today. I'm about to jump on off of here. You know, I looked around. Monday morning is just doing this Monday morning thing. I'm gonna go ahead and get to some work today. Either way it go, I'm gonna make some money some type of way. But yeah, definitely keep your head on a swivel this Monday morning. We're still in the midst of earnings season, still heading towards the kind of mid part of tax season, or yeah, people filing for taxes and all of that. So we're in the middle. We're in the middle. We don't know what's going to happen with the tariffs falling through or starting to fall through. We don't know what the refund is going to be looking like. We don't know if those things are going to come to pass. So it's kind of like, yo, just be ready. Be ready. Anyway, that is it for me today. I'm going to get on out of here. Appreciate y'all for tuning in. And as always, I will see you in the next one. Peace.